All right. For those of you that are joining, just a heads up, I'll mention it again, but there should be a QA button at the bottom of your Zoom, as well as I believe you can post in the general chat. If you do have a question, feel free to leverage the Q&A button there, and then we will make sure to address your question throughout the webinar. And then I'll start introductions in 1 minute so we can start our webinar right at 10:05. And don't worry, if you do have to jump early, this is being recorded. We'll make sure to upload it to our YouTube channel after a little while here, so you can always come back and review the content if you so desire. Well, thank you for joining our cyber insurance Q&A webinar. Today, we're bringing in a couple of experts from Run Networks, Sim2K, as well as TechRug, with one really important goal, and really talking about an often misunderstood topic, which is cybersecurity and cyber insurance. So what is the role and the goal of cyber insurance is kind of today's discussion topic. What we want to make sure that we cover is how cyber rates are determined, or how cyber insurance rates are determined. We want to answer some really commonly asked questions. I'm sure for those of you that have filled out the questionnaires lately, you've noticed they've gotten much longer and have much more detailed questions inside of them. We also want to make sure that we clear up any confusion on what cyber insurance does and doesn't cover. In summary, cyber insurance isn't really a paperwork exercise anymore. It's really a financial instrument that's used to mitigate and predict risk, right? The intent of cyber insurance is to understand what your risks are, understand what it costs, and how to properly protect your company. And so it's really critical that you understand what is and isn't covered and why that's the case, right? So our goal here is to help you understand how cyber insurance fits into your overall risk management strategy, really. And so the hosts and panelists today, we have Michael Seacrest he's an agent at TechRug out of Columbus, Ohio. Ben Finnegan is the president of Sim2K, which is a managed IT provider similar to Run Networks over in Indianapolis, Indiana. Brandon Gordon is the president of Run Networks, managed service provider here in Omaha, Nebraska. And myself, Ben Anderson, shareholder with Run Networks in Omaha. We do encourage you to ask questions throughout the session. This is really just Q&A. There's no fixed agenda. And today's really your opportunity to get clarity from industry professionals who work every day with these kind of issues. So feel free to use the Q&A button at the bottom of your Zoom, and we'll try to answer all the questions that come in. But let's go ahead and kick off the conversation with some questions from Brandon. So Brandon, I know you had a list of questions you wanted to slightly interrogate Michael on in regards to cyber insurance. Where do you want to start?
I have a list of questions, Michael. And I don't know if you guys know, I ask a lot of questions. So I love this stuff. Okay, so let's get started. Michael, I want to start just with clarifying what is the goal of cyber insurance, and I want you to compare this to auto insurance. So what's the equivalent when we talk about cyber insurance, the goal of it from your perspective, or the carrier perspective, as well as the client perspective?
Yeah, I appreciate you guys having me on here. Everybody's favorite subject is insurance, albeit cyber is a little bit different in how unique it is. And really the whole goal of cyber, much like the rest of insurance, is to indemnify those at the time of their loss, right? Now we're dealing with a different scenario that, hey, it's like a car accident, right? Somebody rear ends you or you get into an accident, your insurance is going to pay for your damages as well as the person that you hit, or if you got hit, their insurance is going to pay for you. The goal is to get your car back up and running, right? To get it repaired, get the dent in the bumper fixed, get the paint, the scratches, get all those things fixed. Cyber's kind of the same way, but more of a cloud-based, less physical, more, again, in the cloud environment. And when you have a loss, especially you get hit with ransomware, you got somebody in your network, you got to now notify individuals. There's costs associated with those things. Cyber can offset that financial impact to your organization when an event like that happens. Not if it happens, when it happens.
Got it. Okay, so then I asked you this the other day. Give me an example, and I don't know what happens actually, but in, say, auto insurance, if I'm drag racing and I have an accident, there's a problem with that. I don't know what it is exactly, but that's a problem.
Let's
Yeah.
clarify. Are you drag racing on the street or at a track?
We'll say no, street racing. We'll say street
Oh,
racing. Okay, clearly it's illegal. Okay, it's illegal, but there's a similar situation with cyber insurance and business. Okay, so let's say for whatever reason, what's the equivalent to cyber insurance, a claim that would be similar to a drag racing or an accident from the cause of drag racing for auto insurance? What would happen?
Yeah, so within those, you're always going to have certain, I guess, criteria, things that you should be doing, should not be doing. Drag racing is one of those. Any sort of, it's actually, if you look at your auto policies, there's an exclusion for it. That's if there any sort of racing, illegal activity, basically. I mean, it's like in the cyber world, it's like, hey, I know that if I go click on this link, it's going to lead to a business email compromise, or I'm going to intentionally, not double check my vendors before I send money, or do things that are risky. You're assuming that risk. You knew about it. Why did you do it? Now you got in an accident and you want us to cover it? Good luck.
So do they not cover it in the first place, or they cover it and then do something afterwards?
You'd be lucky if you're street racing and your auto insurance is like, oh yeah, that's fine. You rear-ended somebody doing 100 miles an hour through a residential neighborhood because you were trying to street race on the way home.
They just deny it up front.
They're going to deny. The claim's going to get denied.
And cyber insurance would deny it up front?
So it's cyber insurance. There's going to be more forensics that's going to need to be done. And it's like, wait a minute, this was 100% intentional. Yeah, we paid out on this claim. We either want you to pay us back or we're not going to pay out at all.
Got it. Okay.
So what would be a directly applicable example of where what would be a scenario where that would occur?
Yeah, have you seen that?
Insurance would come deny or come back and say, you need to pay us back for the claim we paid out. Like, what's the situation?
It would be an intentional act, meaning, again, you knew that this was going to cause some sort of loss. You knew that, hey, if I do X, I know Y is going to happen and I want insurance to cover it. That, now the insurance carrier, there's room and there's grounds for denial. You got to be careful. And what does your policy say? All of them, I would say at least 99%, right, are going to say if there's an intentional act that something happens you were aware of, you knew the repercussions that you were going to get hit, there was going to be downtime, lead to a ransomware event, and you did it anyway, but you still want us to cover it, not going to happen.
Okay. I'm going to list some possible types of cyber incidents. You tell me as best you can, yes or no, please, if they're covered or not. Okay, so ransomware, is that covered?
Now
you're not going to say yes or no, are you?
In general, yes. It's hard because they're all unregulated, Brandon. So some of them will cover it. Most of them do, yes. But do I still see policies with exclusions for ransomware? Of course.
Got it. And I'm glad you mentioned that because you said this the other day. The cyber insurance industry is unregulated.
Mm-hmm.
And so what that means is every single policy is different.
Correct.
As far as what it covers and what it does not cover.
Correct.
Okay. Well, that doesn't help me any, but I've got ransomware sometimes, phishing leading to breaches sometimes.
If the policies
probably.
are written correctly, yes. If it's written correctly, yes, it will cover phishing.
Okay. Business email compromise. So session hijacking and it leads to data being exposed.
Yeah, in general, again, yes.
Okay, insider threats, meaning an employee purposely took data, took down systems.
Now, if it's a rogue employee, yes.
Okay.
If it's just an employee that's, again, we're back to intentional acts, different story. But if it's a rogue employee, then yes.
Intentional act from a rogue employee, though.
Yeah, meaning that they're intentionally trying to cause harm to the, Brandon fired him, and now Ben's pissed that Brandon fired him. So now he's going to go click on a bunch of links that's going to lead to, client information being compromised, your internal information being compromised. That's a different story.
How does that get handled? Sorry, not to throw off your yes and no, Brandon.
I know. Is that a yes or no?
You got to look at your policy. What does the definition say when it comes to a claim? Are rogue employees and the acts of those employees, is that something that's covered? You got to find out, read your policy. Get with an expert on your policy that can read that for you and explain it in a situation.
Wow. Okay. And then vendor breaches. So your flooring contractor, maybe that's not a good example, but
a manufacturer.
Yeah, somebody has access to the system. They were breached, and it led to a compromise.
Right.
That's covered.
Yep. Your policy is written correctly. Yes.
Okay.
Could a vendor be part of your supply chain? So if you're like, hey, we're using Salesforce and Salesforce just got hacked,
Yep. Again, if the policies are written correctly, like people on here may have heard of, if you're in the automotive industry, it was a CDK outage.
Yeah, good point.
Everyone heard about AWS. CrowdStrike happened, what, a
Hmm.
year and a half ago
Yeah,
already? The CrowdStrike happened. Those are vendors that are outside of, your IT provider, your MSP, you're outside of, the people on this call, outside of your control. But again, if
right.
your policies are written correctly, typically there's a 24-hour waiting period for those things. That if AWS is down for more than 24 hours, your policies can actually pay out. You can file a claim.
Let's touch on that CD is it CDK, the auto.
Mhm.
So
Yep.
CDK affected almost, I don't know what percent, but a ton of the mechanics and
Mhm.
dealerships. And so they were down for like 5 days or whatever it was. I'm sure data was exposed. So the claim would have been what exactly? Well, there wasn't really a recovery aspect of it, but there was an outage, there was a loss of business,
Yeah,
business
and
interruption.
typically and that's a good question. It typically is going to deal with the business interruption. The part that, hey, I can't get into my systems that I need to sell, process parts, process whatever I need to through CDK. Now I'm losing business.
Right.
Our dollars, we're losing money, and what do we do? How long are we going to be down? How long are we
Yeah,
going to be out this money that your policies typically that the contingent business interruption is what it's referred to as,
right.
is going to be limited to 100,000. Some of them are 250, others are a million. It just depends on, again, you got to look at your policy and see what it says,
Hmm.
but they can actually pay out for those sorts of things, again, after a 24-hour waiting period. So for a
Got it.
CDK, you could have turned claims in 100%.
Okay. Is it better to get this type of information from my general liability provider or separately, or does it matter?
So it's like I relate it to, you're having chest pains, right? You're dealing with a heart problem, right? Are you going to go to a general practitioner with that problem, or are you going to go see a cardiologist? Are you going to go see a general practitioner or a specialist, right? That with cyber, you've got to work with a specialist that really understands the 250-page policy that goes into cyber, reads through all of it, can explain the differences between one carrier versus another, because we're back to unregulated, so no two are the same. No knock to the general agents. They're just not reading through it. They're not doing it. Most of them are an inch deep but a mile wide. They're very good at,
Hmm.
homes, autos, bakeries, things like that. Some of the commercial. When you get into cyber and the unregulatedness of it, you got to work with somebody that's more an inch wide but mile deep.
What about a law firm that has E&O insurance? Is it better to get cyber related to the E&O insurance, or is that still completely separate?
Now, sometimes they'll have a small rider for cyber incidents. Usually, they'll be related to an E&O claim. So, if there's a law firm that screws up somehow professionally, their professional liability policy would kick in, but now cyber needs to kind of pay out. The two will kind of go hand in hand, and it's very limited. Unlike the tech space for you guys on this call, we can bring the two together. For me as an insurance agent, I've got to have insurance agent E&O, and I've got to have a cyber policy. There's nothing that links the two together. They're not related enough to where I can bridge that gap like we did for you guys. So
Let's
Yeah.
you still want to take out a separate policy.
so let's say we have someone that's fairly small, just getting started, just getting established, or maybe breaking off from corporate, starting their own thing. Obviously, costs are a big focal point when starting a business. At what point should people consider having a separate cyber policy from, let's say, their E&O or professional liability, or going through their general broker? Or is it always, sincerely?
Yeah, you want, I say that if your computer's connected to the internet, you need cyber. That you've got to have cyber insurance to, again, protect you from the ransomware attacks that are happening all the time. It's about 13 seconds, there's an attack every 13 seconds. So, you've got to protect yourselves, and especially just starting out, the policy is going to scale. So if you're a one-person law firm that's doing $150,000 a year, you're going to pay a lot less than somebody that's a 100-person law firm doing $150 million a year. There's a lot more exposure. So it's going to scale with you. So starting out, everything's a cost. I would rather pay the $1,500 a year for $1 million cyber policy, or again, kind of that's about what they are. Pay that 1,500 every single year versus, God forbid, you have an attack. Now you're paying, $200,000. Is it a $2 million ransom? I'd rather have that $1,500 per year policy to cover me for these different things. Work with an expert on what we can do, but also work with, like you guys, the individuals in MSPs and the IT world that can protect me, up front and use that last line of defense that is the insurance policy.
Sure.
And they may maybe go through a formal risk analysis, like you're a HIPAA covered entity. How many records do you actually have? And what does that risk represent
Right.
if they all walk out the door? Is it $1 million? Is it $3 million?
Well,
Right.
while we're on the topic, we did have a question come in. What is a good gauge to use to ensure that we have enough coverage for a small law firm that does insurance defense and deals with medical records?
I always see the question on the number of records, and I never know how the number of records affects how much insurance to have and what the cost is.
Yeah, that's everyone's golden. That's a golden question. Everyone asks, what limit do I need? I'm a 1-person law firm, a 10-person law firm. I'm a manufacturer that does $500 million a year. What cyber limit do I need? And I tell every single client, every single person that I talk to, that number is up to you. What do you feel comfortable with that if you were to get hit tomorrow, is it $1 million? Sure, for some people it is. Is it 2? Is it 3? Is it 10? Is it 150? Doesn't matter. It's what you as the individual, the principal of the organization, what do you feel comfortable with? I can tell you that the average claim now is well over $1 million. Downtime's about 2 weeks. I can give you the facts. The facts don't have feelings. It's what you do with that information that you determine what's best for your business. For Ben,
that's
that
my
might
question,
be
though.
$2 million.
Dig into that. Dig into that. If the average claim's $1 million and down for 2 weeks, what does that mean exactly?
And how many records is that? Like, give us some of the data behind it.
Right.
Some of that might cap in the HIPAA statute, like it's defined in that statute where how you can be fined or what that can cap at. So
does that include fines or not?
If it's $2 million and you're like, we're a small law firm, but we have enough personal records, PII, PHI, that we're in that 2 million category, maybe that's an appropriate coverage.
Notify those individuals. Every claim is different. It's not like, even with a car accident, we were using that analogy earlier. Did you hit the person in front of you that's a Ferrari or, is it Toyota? No knock to Toyota or Ford, everybody else. But the same thing with cyber claims. Do we have to notify 20 individuals or 2,000? Are we going to be down for 2 days, 2 weeks, 2 months? It's all different. There is no clear cut. That's why if anybody tells you an absolute limit that you have to have is a $2 million policy, they're lying to you. They don't know if you're going to have a $200,000 claim or a $2 million claim.
Mm-hmm.
No one knows. You don't know when it comes to the event itself. Again, back to records. If you have 2,000 records that you're responsible for, I just talked to an individual late last week that their client doesn't have cyber. The MSP they were working with did not have them in the right spot at all. She's got 1,800 clients. She's been served 12 times already. So
oh, wow.
It's all uncertain. Are we going to stop at 12? I'm sure if I called that MSP today, how much has that number gone up? Did we go from 12 to 30? It's all just this uncertain into what goes into the policy. I can advise that, hey, I think 2 million is kind of the starting point for a lot of individuals in 2025 and 2026. That's where I would say you need to go. Now, if you're coming to me, you're a $150 million law firm and say, I think $1 million's where we need to be, I'd say, hey, you're kind of underinsured there. If you take your business interruption, take 150 million, divide it by 52 weeks in a year, average downtime's 2 weeks. What is that for your organization? You're going to eat up $1 million policy so fast.
Just in business interruption. Yeah.
Correct.
Interesting. Okay.
So I think what we're hearing in summary there is that's part of the reason that you go to an independent insurance, cyber insurance carrier, so that you go through the proper underwriting rather than just get a number from your general broker and assume it's good coverage, right?
Right.
Okay.
Working with experts, I can attest to our own program and the rest of the industry. Claims are getting denied for cyber at about a 44% rate. Between 40 and 44% is what I see when I talk to different clients, when I look and do my own research. Anybody can go look at the FBI crime statistics, the IC3 reports. Anybody can go look at those, but it's about 40%. Okay, that
40%
means
of
that if
claims
I'm
are getting
investing,
denied? Is that what you said?
40% of claims are getting denied. That means that if I invest and I'm taking out a cyber policy at $10,000 a year, you're telling me there's only a 60% return on that if something goes wrong, there's 60% chance that it would pay out? Are you kidding me? versus, our program that, thankful, what we do and we're the experts in it. We've had 100% claim representation and claim payout for the last 23 consecutive months. So for almost, knock on wood, we want to get to 2 years. We got 1 month, another month left, knock on wood, that our clients between, you guys and what you do as the MSP and everyone on this call, between the two policies, we've had 100% claim payout. So we're doing the right things, asking the right questions, working with the right groups, because it's a two-way street. You want the $2 million loan for the cyber, I need you to have the right security in place. If you do, I got a great policy for you, and we're going to be able to help.
I'll tell you, I know you want to move on, Brandon.
I know, I'm trying to dig in. I got more questions on this stuff.
I know. It makes us, I just want to state, and Ben, you tell me if maybe we're the weird ones in the boat, but it makes me nervous when our clients have cyber insurance, but we've never seen a questionnaire from their insurance. And I think Michael's response kind of encapsulates why that's the case really well. Is that how you feel when you have customers with cyber insurance, but you've never seen the questionnaire?
Yeah, I'm not going to touch that until I start. I need more context. Let me see what we're actually doing. And you really have to start to understand their business.
Right.
How much is at risk here?
Correct.
Okay.
Michael, you threw out some numbers there, but I know there's a per claim and per aggregate. So like this person who's been served 12 times, per claim and per aggregate, what's that going to turn into?
So, your policies are typically going to be written. It's not like your business owners where you have, kind of a split limit that you'll have $1 million per occurrence and a $2 million aggregate, meaning you could have 2 full $1 million claims, but that you can't go over that amount. Cyber is typically going to be written on a 1-1 or a 2-2 or a 3-3 basis, meaning you have up to that full policy limit of $1 million for the claim, but also in the aggregate. So you could have one full limit loss, it's $1 million, and you're done for the rest of the year. Your policy's done for the rest of the year. So hopefully, again, knock on wood, you don't have another claim. Now, you could have, break that down, right? You could have 2 $500,000 claims. You could have 4 $250,000 claims. Now, if you have 4 claims a year, we've got other problems we've got to talk about.
Yeah, exactly. There's other issues there.
When you look at those overall limits, again, we're back to what limit do you need? What limit do you feel comfortable at? Here's the average numbers. You got to be careful.
Okay, got it. I went through some things that would be included in that claim, but what is crime insurance? I've never heard of this.
Say it one more time.
Crime insurance?
Crime insurance?
Crime insurance.
Oh, crime. Got it. Crime is more your social engineering, like, hey, we got tricked into sending money to somebody through whether it was a telephone call, it was an email, it was a text message or smishing, you guys refer to, right? You guys know that you got tricked into somehow you sent money. I wired $40,000 to the wrong account. I thought it was the vendor that we used. Turns out it was the wrong ACH information because somebody's been sitting in my network, and now I'm out 40 grand. You can turn a claim in under your cyber policy if it's written correctly.
You guys, did I miss anything on that? Sorry, I was reading my next question.
There's another question in the from the attendees.
Well, yeah. So does crime insurance help with a cyber claim? I think we touched on it, but they're independent of each other, correct?
Now, the cyber crime is going to be, if the policies are written correctly, included on your cyber policy. A true crime policy, where it's more theft that is employees stealing from clients, stealing internally, whatever that may be. A crime policy is a separate coverage. It's a separate policy, just like workers' comp, employment practices, your business owner's policy. It is separate.
Okay, perfect. So
I don't know if I have that or not. Is that part of our general business insurance or not? Is there a rider there somewhere?
No, some of them you can
policy.
Include like a small $250,000 rider on some of the crime policies, but typically, especially working with some different clients, right, that they're going to require you carry crime insurance. Hey, I don't want you stealing from me or an employee stealing from me. The third-party crime has become more and more prevalent.
Interesting. Okay. So, traveler cyber insurance. There's a whole list of particulars on the same topic. They seem to ask the same question 5 times for some reason. And so if the costs are notably different than what the value is being able to check yes. So if we can't check yes to all these things, we are really confused on if the cost of the policy then is different, or it's hard to know what to really focus on if we can't answer yes to everything.
Well, and it's hard for us to know where to invest dollars or effort prior to submitting the insurance questionnaire, not knowing if the investment of those additional security layers or processes or whatever is worthwhile. How do we determine that?
Yeah, and again, that's working with you. We're back to the question you guys asked on, and people ask all the time, is working with a general agent versus somebody that specializes in cyber. Is, those questions that you get from a lot of these other, I want to leave names out, but a lot of these other insurance companies that, they're intentionally vague. Now it comes claim time, we land in a gray area. Who do you think the gray area is going to benefit? The insurance company paying out the claim or the client? So you don't get the largest building in every major city by cutting checks to people. There's your answer. You've got to be careful in what you do and be transparent. If you don't know, get with your IT group on, do we have MFA on email and remote access? You might check yes on email and then assume that you have it on remote access, and you don't, and then you get into a claim scenario and the forensic says you never had MFA on remote access, claim denied. And then you're like, why am I paying for cyber? Why do I do all these security things? When all we have to do is look at the application. And if they're not asking the right questions, don't work with that vendor. It's going to be a nightmare scenario.
A long time ago, Justin told me when there is a short question, you answer it with a long answer.
Yep.
And so I mark up the applications and I put the detail about it. Is that good or not?
I've always been told when someone is vague, go specific. If somebody's very specific about what they're asking, go vague. That's what you need to do, and kind of flip the narrative and say, hey, wait a minute, you asked if we have MFA. Where do you want to see MFA?
So my response
you
is
didn't ask
15
us
different
specifically,
things.
where do you want MFA? Because we got it on email. You didn't ask about remote access. You didn't ask about, getting into our financial, our banking system. You didn't ask if we had MFA there. You just said, do you have MFA? We checked yes. So how are you going to deny my claim? It's gray areas that people get into.
How should we answer the application though?
Exactly. It's the application itself that you've got to be specific. If they're saying, do you have MFA? Ask where. Where do they want to see it?
Okay.
So what happens in a scenario? What I think one of the things that I'm trying to figure out is we had a situation recently. Where we had SSL VPN open at a facility. It's been open for a long time. It's generally acceptable, and through the application process, it was submitted that yes, this is still open, just like it was last year and the year before. And it ended up coming back, and I think it doubled their cyber rate, or at least that was a big part of the risk identified or increased their cyber rate. So from Brandon and my perspective and Ben's perspective, it's like, we obviously make recommendations to do and not do certain things, but it's hard for us to know how is this going to impact the cyber insurance. Is that something that the underwriting team comes back with and says, hey, you can drop these premiums if you do this, or are most of the insurance companies just going to try to take as much money as they can based on the risk currently present and not give guidance? Like that's kind of where we get stuck is, do we put the effort, invest the dollars to do this thing,
right?
Not knowing if it's going to change the rate, or will the carriers actually come back to us and say, yes, that would lower your premium?
Now, unfortunately, I've seen the latter where they like, okay, great, you answered all these questions. Your policy is $15,000 a year. It's like, wait a minute, it was $10,000 last year, and they don't give any guidance on, hey, what can we look at? They're not staying ahead with current trends. They're asking basic questions. I saw one that they're still asking about tapes. I mean, we're in a cloud-based environment. Why are we talking about backup tapes? So for us, and I want to stay kind of away from the sales side, but like for us at TechRug and what we do and working with all three of you is we want to look at current trends. How can we protect the people on this call that carry cyber through TechRug? Work with you guys, understand that we have all of these securities and controls in place to keep premiums down. Okay, if you're doing the certain things that we're looking for, we're asking about certain securities, you're going to see a reflection in premium. Now all of a sudden the clients are saving money because they're taking out these extra securities and precautions, to make sure they themselves don't have a claim, but God forbid they do. It's not an $800,000 claim, it's an $80,000 claim. So we're taking the approach on our side to have all of us work together, kind of everybody's in the same boat, rowing in the same direction. The rest of the insurance world, unfortunately, is kind of pitting you all against each other, and then they're the ones holding the keys to the kingdom, or the money in the bank account, and they're going to say, nope, claim denied, sorry. We're back to that 44% claim denial. That why do I pay for cyber? Why am I paying, Brandon, Ben, and Ben the increased security stacks? Why am I paying additional through you guys if it doesn't cover, my policy doesn't cover anything? Why would I do it?
So if we see it on a questionnaire, basically we need to assume that's going to be factored in fairly heavily into the premium.
Yeah, you want to be able to check yes to most of those boxes.
Mr.
I love
Finnegan,
how we have our moderator that has his hand raised, by the way.
I was going to say, Mr. Finnegan, I apologize for cutting you off. Please.
Oh, no problem. And to follow up on that, this might be a question that we see with some of the attendees. So if a cyber questionnaire comes back, and I've seen this happen firsthand, and it says, do you have MFA on every admin interface on every system in your environment? And I looked at that, and it's like a yes or no checkbox. And it was like printers,
Yeah, exactly.
every single piece of equipment here. And we went back to the provider, and they're like, yeah. How would you recommend we act there? We're faced with this dilemma. Do we say no, or do we actually move to do that? Or do we say, you need to go find a new insurance carrier because this question is ridiculous. It's like your tape backup question. It's like,
right.
And Clarified, Ben, we never have MFA on switches, it's an admin interface. There is probably a risk there. MFA, I know there's other stuff that it is an admin interface, but there is no MFA on it. There's just not.
In that example, we actually went back to the security that was Symantec that was behind the carrier and had an in-depth conversation with Symantec in that situation. To me, it's just a terrible question, and it looks like a trap door that somebody's like, oh, you put
You're
yes
right.
on here, so we're going to deny you. Is that just a red flag for maybe this vendor isn't the right vendor, and let's do a little homework maybe?
Michael?
Right. That's accurate in what you're saying. It's kind of, people ask me all the time, what are the escape clauses? What are the ways out of, the claim not getting paid? Again, we're back to 60-40. 40% of them, there's a 40% chance that claim's getting denied, not paying out the full amount, X, Y, or Z, right?
Right.
How do we make sure that doesn't happen? What do we need to do? You got to ask the right questions. And unfortunately, for us, just to clarify also for everyone on this call, we're our own insurance company here at TechReg, the Technology Risk Underwriting Group. We are our own insurance company. We're not a broker that represents a bunch of different products, a bunch of different carriers. We are the product. So for us, it's we're back to that inch wide, mile deep. We're asking the right questions on where we see claims in 2025. We got to adapt for 2026 and ask the questions in 2026 on, we got to have, the MFA turned on for email and remote access. We don't need it on switches. We don't need it on printers. Why do we need MFA on a printer? There's certain things that just don't apply to different industries. Each industry is going to be specific. We have to look at the totality of what is going on with that client. What industry are you in? How is the cyber policy going to protect you? What securities and controls do you need based on the industry that you're in? A doctor's got HIPAA he's got to follow. Doctor's got a law firm's got the bar, right? That we've got to follow different protocols and figure out, how do we make sure we adhere to that standard and follow those standards accordingly? That's what you've got to focus on. If you're not doing it, red flags all day.
Yeah.
Okay.
So that's a pretty good segue into one of the questions we have,
Yes,
which
exactly.
is, if we're already bound to our cyber insurance, can we use Michael and TechRug for a better policy? Or are we stuck until year end?
But Michael, I want you to clarify first what exactly you are, because you're not just an agent. TechRug is what exactly? Broker, carrier, an agency or what?
It's technically called an MGU, Managing General Underwriter, or a cover holder through Lloyd's of London. So basically, we've gone head to head with Lloyd's, which I don't know how many of you are familiar with Lloyd's of London. Well, the largest insurance conglomerate on the planet. They have about 77 different syndicates. We underwrite for one of those syndicates, and we've basically gone head to head with them and said, hey, you try to write cyber and we'll write cyber. We've had a 4 times less loss ratio, meaning our clients, we're not turning in claims as much because our clients aren't seeing it. They were having more claims. It's costing them more money. So they came to us about 4.5 years ago and said, hey, here's the pen, TechRug. You write the policies. You guys tell us what goes into it, how people get it, the underwriting procedure, claims counsel. The 1% that we don't is the financial backing. Lloyd's backs us and says, hey, we'll pay out the claims. You guys handle everything else. So we do it all in-house, working direct with our MSPs, like you guys on this call, the end clients, the attendees on this webinar, working together and bringing everyone to work together rather than against each other. So we're our own insurance company, that we are not representing products. We are the product. It's a TechRug Lloyd's of London policy that you're taking out. And to answer the question that's in the chat is when did you renew the policy? I guess it's the question. If we renewed a few days ago, a few weeks ago, there's usually either a short rate penalty that you can't cancel, or they're going to keep that first month's premium, that regardless if you're 3 weeks in or 4 weeks in, you're going to be charged that amount. After that, you can cancel. So happy to take a look. Even if we don't write it this year, I want to come in and educate and just say, hey, your policy is good or it's not good. Here are the things to look out for. Let's talk about it. If we can write you, let's go ahead and do it. But, let's have a conversation after this. And I'm sure my information will be somewhere. If not, it's just Michael S. at TechRug. Send me an email or reach out on LinkedIn. That we've got social media all over the place. We got
you can cancel a policy mid-year without any issues.
You cancel the policy before the end of the year?
Yeah.
Yep.
Mid-term. You can just cancel anytime.
Mid-term. Yep. There'll be a form. It's called an LPR that you have to sign. It's a cancellation form that says, hey, we're canceling this policy mid-term. If you've paid for the full year and you're 6 months in, you'll get that last 6 months. It's called unearned premium. You'll get it refunded back to you.
Interesting. Okay, so what about like a second policy? Is there any reason that people would consider? This happens for like dental and health and that kind of thing. If you have a second policy, have you guys ever done where you're the second insurance?
You're going to stack policies on top of each other.
Something like that.
It's called excess, almost like an umbrella policy, where you would have a primary that their primary might be through Travelers or CFC or Coalition or whatever cyber carrier. And then typically it's done through one agent. You don't break up the agents. So like I have clients that carry a $2 million limit through one provider, right? We've got, specialty programs for it. It's a different conversation, but we've got one provider that sits on the 2 million, and then TechRug sits over top of that with another $3 million. So total you've got 5, but it's broken up between 2 different carriers.
Got it. Okay. Do insurers offer risk assessments or cyber hygiene audits before binding coverage? More than a questionnaire.
Some of them will do, it's a questionnaire. A lot of them don't. They're not doing vulnerability scans, pen tests, anything like that. Now, some of them have started to, and they're getting into your space. I know it irritates you guys.
It irritates me, Michael. Yes.
Exactly. That's what we lean on you to do. If we're working with, anybody that's on this webinar, we're working with them. We're working with you guys. They're working with a TechRug preferred, MSP, right? That we don't work with every single client that comes to our desk. It's the upper, 5-ish% of MSPs that we work with. But when you look at the questions that we ask and the risk, analysis that we do, that's what we want to look at. Where are you right now? Where should you be? Or are you where you should be? And how can you get the policy that reflects that? That's going to be, for us, we're saving clients 30 to 40% compared to the rest of the market.
Interesting. Okay.
So we're saving money. You're less likely to have claims. If you do, the policy is going to be there because, again, we're both under one umbrella. Between you guys are, working with me, and I know we work together, right? That your policies through us, their policies through us. One of the two's paying.
Yeah, let's get into some of the technical questions we have here, Brandon.
All right. Give me an example of a type of incident that's not covered. What have you seen that's just some sort of negligence that's just not covered? What have you seen?
There's really 2 that's like, kind of catastrophic, right? All the policies, again, they're unregulated, so you got to read the definition of a claim and different things like that. But in general, it's going to be terrorism, number one. If Russia, China, a third entity, right, it invades tomorrow and there's EMPs and we're all out, there's different problems. That's going to be excluded from the policies. The other one is material misrepresentation, meaning you lied on an insurance application. You said you were doing X, you weren't, you had a claim, we're not paying for it. Those are the 2 big ones that's every single policy, that you can't lie on an application and expect to get it's like lying on a home loan. Oh yeah, I've got an 800 credit score, and we've got,
Yeah.
we can do this. I make, $1 million a year, and then they do their finding, and it's not true. You're not going to get that loan. It's the same
Let
thing.
me let me ask a clarifying question on that. One of the challenges that we run into with a lot of the clients that we work with is they are unable to get 100% of their employees to complete their cyber insurance, or not cyber insurance, their cyber training. What does that look like? So if a company is best effort trying to get everyone to complete it, they end up needing to have a claim and only 70-80% of their staff has completed their cyber training. Is that grounds for a denial? Or tell me a little bit more about how that may work.
So you got to look at how the questions, but we're back to specific and vague. How is the question phrased on the application itself? Does it say that all employees are receiving training? They are. That's true. Does it say that they're receiving and completing those trainings? Now that's a different story. Now you can get into grounds where you got to read through these things. And if the question being asked on the application says, do all of your employees receive security awareness training relating to phishing, vishing, smishing, all of the different, the types of social engineering, right? And they're completing them, or is it just that they're receiving the training? Because they're receiving, they're getting the emails that say they need to do it. It's whether or not they're actually doing it is the question.
Are they going to deny a claim though if 85% of the staff?
That's up to the carrier. Do they want to see 100%? For us, we want to see that everybody's doing it. We want to see that everybody's receiving and they're actually completing the trainings. And what's the timeline for completing the training? Are they going to get it done? For us, it's about 6 months. There's about a 6-month window. We want to see that they've done it in the last 6 months. So however
I see. Not monthly necessarily, but
correct, not monthly, but we want to see that they've done it in the last 6 months. They've received some sort of training. They've done it. They've completed it. They've got its certification, because a lot of them, when you do it, you'll get a, hey, congratulations. Here's your, blue letter that you did your training for this month or this quarter or whatever.
Ben Finnegan prints his out every time he passes those.
For an enterprise perspective, I've seen like very large local pharmaceutical companies block your access. They'll shut your account off if you do not complete your training. It is not a joking thing. It is actual. That's what's going to happen.
So we have a medical client here. We have a medical client here that removes your email access if you don't complete your training. Kudos. You know who you are.
It's smart. It's lock them out until they do it, because would you rather be locked out of your account because management's mad that you didn't do your trainings yet? Or would you rather be the one that clicks on the link that now everybody's locked out and you're out of a career?
Right.
The organization's
just ruin your reputation.
Thousands of dollars, hundreds of thousands, millions of dollars because you didn't want to do your 20-minute training.
Okay, so we have a situation. It came from an email phishing. Somebody was compromised through that process, a bunch of SharePoint data. Let's say that we have, I'm going to say like 20,000 records exposed out of that. And it leads into a restore, backup, or a restore from backup, right? Mainly because we don't trust something. Even some servers are involved. So the claim process for that, as far as coverage, I want to know what that includes, because it's not necessarily incident response. There is some in that, but it's a lot of work afterwards to just get everything up and running. So does that cover the project to do that?
So your cyber policy, think of it like a cyber contract, okay? That contract is between the person that bought it, so anybody that's on this call that has cyber insurance, that would be your organization, and that cyber carrier. They're going to have their own team of incident response vendors that they use. So my point is that the rest of the insurance market doesn't want Brandon, Ben, or Ben involved at all. You're going to have tools, obviously, that to design endpoint detection and response, SOC SIM, different things that are designed to isolate that computer from the network. But then the clients, the ones on this call, are want you to get them back up and running. They need to push out product because they're a manufacturer. They need patient records because they're a surgeon getting ready to walk into surgery and they can't access records. It's how do we respond now that the computer's isolated? Do we restore from backup? Do we not? You've got to wait for the insurance company to tell you, the client, what to do, when to do it, how to do it, to tell you guys what to do, when to do it, and how to do it. That takes time. We don't have time. We've got to react immediately. And for TechRug, we noticed that was the problem. Again, don't just bring me problems, bring me solutions. My 4-year-old brings me problems all the time. Tell me what the solution is. How do we get Brandon and Ben have been involved with the claims process, with the incident response, create a true incident response plan between TechRug as the insurance company, Brandon and Ben as the MSP, and the client as the one with the cyber policy or cyber contract. Let's all be involved. We'll take you through a vetting process. You guys know that we have the incident response training that will help you. Then when anyone on this call, and I see a couple names up here, so I apologize calling on you directly, but Cody, Diane, Donna, Isaac, you guys have a claim and something goes on, Ben and Brandon in our program involved immediately. We don't have to sit around and wait. They're backed by Lloyd's to respond to this incident. The rest of the cyber world, the rest of these carriers don't want you to touch a thing. They don't want you to do anything. And it creates a longer downtime, creates more incident response, more things need to happen. And it's just unnecessary.
Okay.
So I know that's a long-winded answer to your question, but that's how these things get handled. Either you have a cyber policy that's not through TechRug, not through a specific insurer, that you're going to a broker, you're going to a general agent, nothing we can do, nothing you guys can do. TechRug, we've got solutions, get you guys involved. Let's figure out what we need to do, how we can do it, and minimize the overall, downtime, claim payout, all those things.
And if they aren't with TechRug, it's understanding what the incident response expectations are for policy.
Correct.
Okay.
Which no one knows. I've never seen that defined, and it's your best guess. So
Right.
You're going to potentially walk right back into a trap door.
Right. I don't want to be on the worst day of what would be their professional career with uncertainty and doubt. I wouldn't want to be in that scenario. I wouldn't want to be in a relationship like that.
Yeah.
Okay. My concern after an incident is the business reputation.
Mm-hmm.
Do you guys address that at all?
So the policies, again, if they're written correctly, will address reputational harm. If there's credit monitoring that needs done, things like that go on, your cyber policies can actually pick that up.
Okay. Documentation or proof required for a claim. So there's an incident, of course. We've got some logs.
Mm-hmm.
What's the expectation as far as proof?
So there's, again, the two different routes. The regardless, really, when the claim comes in, they're going to want to see logs. They're going to bring in, you're going to have these huge incident response firms that come in and want to see, okay, what's the initial damage? Kind of triage, figure out what's going on, what's happening. All of that takes time. For us, we said, hey, Brandon and Ben are in this already. They know what's going on. We know what happened. We already have the logs. Let's speed this up. Let's get this going and figure out how we get the client paid. And so the actual responsiveness and how it gets handled is kind of the same to an extent, right? The carrier is going to want to bring in their own people. That's going to take time. God forbid it's a Friday that somebody gets hit. Saturday. It's never Wednesday morning. It's always the Friday before Thanksgiving, or that kind of, I guess, that Wednesday leading into Thursday, Friday, Saturday, Sunday. People are down. Nobody's working over here at the insurance agent, your broker, the agency, that then they got to get with the carrier. Now we're just down for longer. For us, we said, okay, we're going to have you guys involved immediately. What we're going to do is when you pick up the phone, it's Saturday at 2:00, somebody's calling Ben, and there's an incident that happens, Ben can react immediately. So you got to look at what your policy says. Again, it's a contract. Who's privy to that contract? You and the insurance company. Don't look for your MSP to be involved over here. TechRug's got that solution. And I know I don't want to get too salesy into what we do, but it's the reality of what's going on. One of two people can react.
Yeah. Good.
Question for you. We had a fairly large healthcare client have a cyber insurance or an incident this year, and it was a very eye-opening and learning experience, even having done this for 25 years. My biggest question coming out of that, and what we're now doing with all of our customers, is how you would handle the conversation ahead of the breach and ask the people in this room how to plan through what happens when there's boom. They're like, it's not going to happen to us. So how do we do that risk analysis? Like, do you actually know what's in your inbox? Do you have 10,000 PHI records sitting in your mailbox? So if you accidentally click that and those leave, it's that risk analysis. Like, what is the best way that you've seen to have that conversation?
So it's the approach that we take that's let's all be in the same boat rowing in the same direction. Let's get with Ben on the current securities and controls that you have in place, Mr. and Mrs. Client. At the same time, what we're trying to do is one, keep the insurance available, but also affordable. Okay. And it's a two-way street. We got to do these things. So we want to see that the right security protocols you're doing, maybe it's a pen test, especially for the larger enterprise clients, you're doing pen tests, we're doing vulnerability scans, we're being proactive, not reactive. Okay. Post breach, it's always easy to take out more security. Let's not have the breach. Let's go through your security. Let's go through what Ben has in place for you. Let's figure out what you're missing or you're not doing and get those things in place, which, oh, by the way, if you do in our program, again, we're going to save about 30 to 40% in our program compared to the rest of the market. So you're going to see financial incentive, is the goal, obviously, a financial incentive to implement these things. Right now, maybe your current, I had what was it? It's a car dealership in California that they were paying about $75,000 a year for their cyber insurance. And our program, it was about 40. So we're talking about a $30,000 difference. They had to go back to what would be you, Ben, spend an extra $8,000 to do, I think it was centered around like security awareness training and something else that they needed to do. But my point is they were all in at 48,000 over here, less likely to have a claim because they're more secure. They're going to have a policy that actually works. They're working with one of my preferred MSPs. So we went from 75,000 to 48,000 over here. We saved them a tremendous amount of money and reduced their exposure. That's what we're going to try to do. Now, obviously, the larger scale, the more people are going to see in savings, the more you're obviously paying, the larger the business. We're back to one-person law firm versus a 150-person law firm. They're going to pay different premiums. But my point is, we can save money if you're doing the right things, if you have the right controls in place. And at the same time, again, knock on wood, we've had 100% claim representation for the last 23 months, almost 2 years, that we have paid out on every single claim that's come in. Because human error happens. It's going to happen. It's not, oh, if we see this thing, it's when you do. The reason you don't hear about it in the news is because you're not large enough. You're not MGM that's bringing in billions and trillions of dollars.
Yeah, good point.
When they get hit, you hear about it. When you get hit, 50-person law firm, you're just not big enough to make the news. It's going to happen to you.
So the three takeaways before we get to like any last questions here, like make sure we have alignment. Make sure we take risk that is invisible and make it visible.
Correct. What's
sitting in your inboxes, and assume breach. You are going to get hit. Everyone on this call is going to get hit. We hope it doesn't happen, but we should assume that.
Right.
And have an open and honest conversation.
Mm-hmm. Yep. Yeah. So at this point, for the audience, if you have any questions or clarifying statements or questions that you have that haven't been thrown out there yet, please do so now. We'll give you a couple minutes to type them out. I do have one question I know everyone is wondering, and that is, how can I reduce my premium? Michael, give us a couple of bullet points. What are some things that you commonly see that people can take advantage of to reduce their cyber insurance premium, regardless of carrier?
You want to look at kind of I see kind of 5 or 6 major questions that everyone asks, every insurance company, right? They want to look at, MFA, we've talked about a lot, okay? Security awareness training. You're doing regular, have some sort of, endpoint detection and response. Those are kind of the main, I would say 4. There's usually some other ones in there, centered around more, I guess, what do they call it? It's like disaster recovery. How do we have kind of what's our plan if something does go wrong? How do we react? What do we do if are you wiping and restoring from backups? What are we doing? That really answer a lot of the questions, I guess the major questions that the carriers are looking for. Now, additional security is above and beyond that. If you're doing more, you're less likely to have a claim. Your premium should come down. That's the thought process that we take to this. So if you have the right securities and controls in place, let's have a conversation, right? I want to talk to you because I can help you. If you don't implement those things and watch your premiums, I can't speak to every carrier, but watch your premiums come down. Last year, turn in one application that says you're not doing any of those things and answered no to all those questions, and turn one in when you say yes. You can see the difference right then and there.
So if we've quantified the risk and we have not only those 4 coverages, those 4 big things in place, but let's say we have 12. Hey, we're doing all these 12 things. We're very compliant. We're very mature. Are carriers open to negotiation, or should it be like, nope, that's your quote?
It's going to be, usually it's going to be your quote, and they're basing it on those yeses, those 12 things that you are doing, versus, again, say no to those 12 things and watch your premium go from 5,000 to 25,000 very quickly. I see that all the time.
So any no's are
Try to make them
opportunities
yeses.
to keep that.
Yep.
Fantastic. So I guess for me, one of my biggest takeaways, you kind of addressed the question I had in the back of my head. If I'm not getting a cyber insurance questionnaire from one of my clients, do they really have the appropriate coverage? And is their risk really being mitigated? In short, no, we should really make sure that they're talking to a specific cyber broker, obviously, ideally TechRug, but seriously, just an independent broker that specializes in cyber, right? And make sure that you're mitigating the risk properly. I really appreciate you taking your time today, Michael, Ben Finnegan as well. It's nice having, another Ben on the call. It's, the cool guys. And then Brandon, thank you as well. So everyone that joined, I want to thank you for your time too. We'll get this uploaded to YouTube as soon as we can. So you can check it out at Run Networks on YouTube there. And if you need help with cyber insurance, Michael S at techrug.com. He has been a great resource for all of us on the call. And TechRug has done a fantastic job for us as well. So thank you everyone for joining. I hope you have a great rest of your day. Take care.
Yep. Thanks, guys.
Thanks a lot, you guys. See ya.
Bye-bye.